Hey guys, this is Alice Otto with Simple Option Strategies. Today I wanted to share with you what I look at for this is my zero DTE trade. And obviously overnight we had a very, very strong uptrend. In fact, futures were up over 2% this morning and continued moving. And basically before the market closed, or before the market opened during regular trading hours, the futures were at a high. Okay, so we had a very, very strong uptrend, and I wanted to take a trade that would go in that direction. I try to trade in the direction of a trend, but typically when we have a strong up move overnight, when the market opens, though, there's going to be sellers that want to cash in on their profits. And it's very, very normal that occurs. So I was expecting that. And so you can see here at 9:30 that we had a little bit of a spike at the open. And then what I wanted to do is just kind of wait this out to see what would occur here. And we had a nice move down, nice sell-off, which what I expected. And just to let you know, I didn't want to put on a CCS, a call credit spread, just because of the possibility today that we're going to have a pretty strong rip up, just with everything that was going on. So let me share with you what I look at. Okay, so I was looking here at a market going down, and I actually put in my order right around 940, I would say, around 940, and actually waited, and it was the put spread that I put on was 28 or 29.85, 29.80. And put it on for a credit of 40 cents. Well, I put on the trade and it got away from me. So I don't typically chase trades. I wanted to see what would occur. So let me share with you here what happened here. So I saw a very strong oversold position here, and that's when I entered the trade right at this point right here. Okay. At the same time, I'm looking at the 5-minute. The 5-minute chart, and you can see here that we have a an area of support that was created overnight. Okay, this is a pretty strong area of support. Now, when the market opened, and let me expand this a little bit. Okay, when the market opened here, here's the 5-minute. It went down to here. Now, what I usually do is once we hit a low, I'll wait to get a test. Okay, so I don't want to wait too long because I want to take advantage of implied volatility. So I waited for this drop right here, and then I put in my order. Okay, it didn't get filled, but it did get filled when the market went up, tested that, and then actually breached that area of support. Now you ask, well, why didn't you get out? In that area of support. Well, in the market, when the market opens, it's really volatile. Okay, so there's a lot of volatility here, and again, we had a strong uptrend. Now, while I was looking at the 5-minute chart, I also look at vol SPD. Okay, vol SPD is like the advanced decline indicator, but it's volume weighted. Okay, I'm not sure if any other platforms put this out, but the symbol is $VOL SPD. So this is a weighted indicator. For a volume weighted indicator for the S&P 500. So you can see here from 9:30, it was just completely green. Even when the market was going down, the indicator was saying there's still buying out there, just not as much as it was this morning, but there's still very strong buying. Okay. In fact, we only had one red candle on the 5-minute at 10:40. And so I was pretty confident that we would reverse. Okay. So once we hit this bottom, and what futures buyers like to do is they like to take out stops. Okay, and you can see here that the volume spiked right when we broke this low here, and that's when they wait to get in, because it's basically an indication of capitulation, where a lot of the a lot of the buyers are getting out, they're getting stopped out, and that's when the smart future sellers or future buyers come in and they start buying up the positions at this point. Okay, and so even though we had a breach, on the 5 minute, it was okay. We're still decently far away from the strikes that I put on. And again, because I was pretty confident that we would continue moving higher, I held on to that position. And so at the same time, I also look at the VIX. Okay, and you can see here after the market opened, the VIX, went down a little bit, then went up. And I knew with that volatility, I was going to be able to catch this position. So I waited. I did catch it, and it actually, went through 45, and I think that the highest it went to was 55 cents on that position. So you could have got in at any time in that realm. Okay. Then after that, about 10:15, you can see that we had a nice crush down on volatility, which really helps the position. And right now, the position that I took on for 45 is now at, let's see here, showing about 35. May actually be lower here. Let's see. Yeah, it's going to be lower. It's actually, let's see here. Well, it's not showing me. There it is. It's 18 cents actually right now. So the position moved from 45 up through 55, and now it's around 18 cents. And again, I have a lot of confidence that we're going to continue moving up just because I recognize this pattern. You don't want to short this market when this thing is moving up so high. And again, now since we have, since we're past 10:30, what I do is I look for the high and low of the market open, okay, which is basically right here is the high, here's the low, and this establishes your range in the first hour. And this is IBL, okay. So this is the IBL low, initial balance level low, and initial balance level high, okay. And you can trade off of these as well. If you trade futures, you can this is kind of a no man's land, and catching this thing was important at the bottom, if you're futures trading. One more thing too I wanted to recognize here is number one here on the 5 minute, we never even entered into an oversold position. The market was so strong. You can see here we're overbought, and it's just telling you that the momentum is very, very strong. Never got into the oversold condition here down at the bottom. However, on the 1 minute, we did show an oversold condition here, right? And what another positive thing in entering this position as well is that we had a down move here. At the same time, the RSI was indicating that it's losing momentum as it's going down. So it's just another indicator that this thing is going to reverse. Okay, so I took on the PCS. Sometimes you have to kind of cringe a little bit when you see the market going down, that hard, that aggressively, but it's very normal at the open. And wanted to share this with you so you can recognize some of the things that I look at that gives me confidence in the trade. And this one will probably expire worthless if the market doesn't reverse here. Okay, all right, that's all I got today. Thanks for listening. Hope this was of value to you. Thanks. Bye bye.